Oh, I meant to go into the intro there, but I missed it. It popped up just where I was supposed to click. Anyway, good morning, everybody. It's the 1st of December. We're Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, good, thanks. That was like a bit of a messy penalty, wasn't it?
It was a bit of a messy penalty, yeah. Well, he got through in the end, didn't he? His dream stays alive. Okay, let's get cracking, shall we? A bit of an interesting day yesterday in the markets, and a surge in risk appetite has been seen pretty much across the board. So we'll dive into that shortly, but let's get into the reasons behind it first of all. So first up, we had Eurozone inflation declining yesterday. The headline Eurozone CPI inflation rate declined to 10% for November from a previous reading of 10.6 and well below the consensus forecast of 10.4. The underlying rate held at 5%, which was in line with market expectations. We did see US jobs growth slow. The ADP data recorded an increase in private sector payrolls of 127,000 for November after a 239,000 increase in the previous month and below the consensus forecast of 190,000. Powell had his speech yesterday at 6:30 UK time. And he stated that it makes sense to moderate the pace of rate hikes, and this could be as soon as December's meeting. He did add that it was likely that the terminal rate would be somewhat higher than expected in September, but this element had already been priced in. According to Powell, the October inflation data was a welcome surprise, but it will require much more evidence to give reassurance. He added that the slowing of the economy is a good way to balance risks, and restrictive policies will be needed for a considerable period, but added that he didn't want to over tighten, but cutting rates is not something he intended to do anytime soon. So the market reacted really positively to this, in that he will slow the rate of interest rate increases. And of course, on top of that, we had the Eurozone inflation number declining as well, suggesting maybe that inflation has peaked in the Eurozone. As a result of all this, we saw US yields decline. Powell's comments overall were seen as relatively dovish, with no major hawkish elements or pushback against market expectations. So we saw yields retreating to an 8-week low near 3.6%. That's on the 10-year. So this created a surge in risk appetite following Powell's comments, with strong gains on Wall Street. I think Nasdaq was up to closer to 5% yesterday, posting a really impressive pattern on the daily chart, which we'll come on to soon. There's also a slide in the Chicago PMI index yesterday, declining sharply to 37.2 for November from a previous reading of 45.2 and below consensus forecast of 47. So a big miss on that, reinforcing reservations over the manufacturing outlook. So it wasn't all one-way traffic yesterday. Also some hints over the BOJ, sorry. The Bank of Japan member stated that monetary easing must be maintained, but the timing of an exit could be brought forward depending on the data. So it's a big dip in dollar prices yesterday. The dovish interpretation of Powell's comments and lower yields were important in pushing the dollar lower, and there was further selling in Asia, with the dollar-yen pair sliding to 3-month lows. And the overall dollar index just above 15-week lows. So plenty for us to go through on the charts. Steve, let's get straight to it. We're going to take a look at crypto to start.
So,
I don't think it's the most interesting market, but
yeah, well,
we've got a lot of followers.
It's all in the interpretation, isn't it? So let's have a little bit of a look, because I think it's interesting, Joe. Anyway, but I think all of this rally yesterday is a little bit of a fart in a bath, to be honest. I think it's a little bit of a relief rally, if anything, but I think it's like last time that we had this type of rally. We had this really big surge, I think it's a couple of Thursdays ago, and then it sort of like it petered out really quickly and reversed very sharply, because people are going to still realize, oh, it's only 10% inflation rather than sort of like 10.4 that we were expecting. It doesn't matter. People aren't going to start spending their money anytime soon because they can't afford to. So you're still going to get issues going on in the longer term. And yeah, I just feel we're sort of like there's a massive disconnect at the moment. The great big reset is occurring, people. You heard it here last. Anyway, let's go into the daily chart, because funnily enough, the technicals seem to have worked pretty well. We had this spike higher on the 13th of November, the Sunday. Price action got up to 17,240 before being smacked back down again, and we got up to the exact same level today, 17,230. Sounds like a dentist appointment. But yeah, so we've sort of like had the big rally, run into this resistance, and if anything, we can sort of like we can look at this and think, oh, it's a bit of a inverse head and shoulders, double bottom type formation, and it could well be. It looks a bit messy, whichever one you want to go for. The neckline for me though is this 17,230. So let's draw a bit of a line in the sand here. Let's make it a big glaring red resistance level. That's what the word I was looking for. We had a spike lower on the 19th of June, again a Sunday, that is set down to 17,560. So we have a band of resistance now between 17,230 and 17. It actually says 240 there. Let's just adjust that because it's a really funny joke that I'm sharing. And between there and 17,600, that will continue to provide resistance until we get a breakthrough, and then it does open up to the upside. Then I will be slightly scratching my head and thinking, why is all this risk rally on in the Bitcoin? It's got a lot more issues to deal with. As you can see, the sort of like the moving average, the 5,500, 200-day moving average are moving aggressively lower. That will continue, and it'll start to peter out eventually when we get into this sideways price action. But I'm sure these resistance levels look like they could hold. XRP is has got resistance just above at 41.80 to 42, and again good rally yesterday, but stalled at the resistance level and continues within a triangle formation. Moving across to the commodities, let's take a look at gold and how that was impacted after yesterday's price action. Well, pretty positively, which is a bit strange, because there was a risk-on rally and gold joined in. That may have been a dollar effect, I suppose it was. Dollars went lower, gold moves higher, normal stuff until it really settles down. However, today the price action has stalled in front of resistance. Our previous swing high was up to 1786.5. We've got the 38.2% fib at 1789. We've got a band of resistance at 1800 to 1808. We've got the 200-day moving average coming in now at just below there, 1797. So we've got plenty of resistance up above. We have got this this sort of like potential bullish flag pennant formation forming, but really needs to clear this resistance, and I think it's going to struggle over the next few days. Obviously, dollar will really give us that that push if it's needed. Dollar index down to where is it? 105.75. Joe's going to cover that in a second. So yeah, overall, there's the resistances, and currently price action forming a little bit of a shooting star candle, which will be negative for the next few days. Silver, similar sort of price action up into this resistance area, hasn't quite managed to get above the 2250 level, which is key. Above there, we've got this inverse head and shoulders. The measured move target is 24.92. But as you see, I'm still unconvinced of this rally. Bit of a crossover in the 55 and 100-day moving average on copper, and that has assisted with the rally high yesterday. And but we've got the 200-day moving average looking ominous above 392. Also got resistance at $4 level. So that'll be interesting to see what happens when we get there. This morning doji star formation in WTI crude oil has worked out pretty nicely, and we have had 2 really positive days of price action. We're back up to where we were last Wednesday. So we've had the oil inventories out this week, which it reacted positively with muted price action today. Resistance really comes all the way up to 82.40 today. So really needs to push through there to sort of like for this rally to kick on. And again, it's sort of like everything feels a little bit of a damp squib at the moment. Brent crude oil, again, similar reversal formation, morning doji star formation. It seems to have pushed a little bit higher over the last couple of days. I think we were looking at selling to rallies today, and price action on the day itself today has been pretty muted, bit of a doji or dodgy candle, and not really looking for anything clear there. Natural gas continued the move lower, and that looks a little bit on the back foot, which is great for natural gas consumers, but not so great for this inverse head and shoulders formation. We still feel like we're retesting the neckline. We've gone a lot deeper. It doesn't really negate this formation maybe until we get to below the 630 or $6 level. But yeah, on the defensive at the moment, resistance all the way up to $8. So pretty much middle of the road at the moment for natural gas. That's about it on the commodity side of things.
Okay, thanks, Steve. You appear to be hating this rally by the sounds of your comments.
Don't get it at all.
Yeah, I mean, I don't necessarily get it, but looking at the charts there, you know, as technical analysts, we can see some pretty clear breakouts out there on a few markets, which, yeah, it does mean, you know, scratching your head a little bit, but it just feels like this is a really hated rally, and these are generally the ones that tend to have a bit of legs behind them. Just think time of the year
very
as well.
positively.
You know, I don't know what's catalyst we're going to see now between now and Christmas that's going to potentially change things. We'll come on to the indices in a minute. Just go to FX first and go through the dollar, because obviously that's an important market that we need to be aware of. And yesterday we saw a pretty sharp reversal in that, posting this candle here, a bearish outside day, and we have gapped lower today into these previous support levels at 105.34. So we touched this on the 15th of November, again on the 28th, and now we're doing it again on the 1st of December. So we have seen a bit of a bounce early on this morning, but looks for me as though it is still under pressure, and we're forming some sort of top here on the dollar index. So a few important levels below 105.34, we immediately come into another level of support, which is a 38.2% fib at 105.13. Then we've got these lows here from the 10th of August at 104.63. So while these levels continue to support the price, there is potential for a bounce. But if we start seeing these break down, then I have to say I'm sort of all aboard the rally really in equity markets, because this is, you know, a pretty significant breakdown, and certainly the pressure looks on the bearish side for me at the moment. Looking at euro dollar, similar sort of situation. We posted a really strong candle yesterday following the break of this kind of flag pattern. Still looking for higher prices here. Yes, we have some resistance to overcome around 104.81. But for me, I think we're going to get to this 38.2% fib level at 106.10 as a minimum, and then kind of reassess at that point. But for me, it looks like a nice bottoming pattern here that we're forming, and therefore we can start expecting higher prices over the short to medium term. Looking at cable, that's up 0.3% today, potentially forming some sort of continuation pattern here, although it's very small. We could argue this maybe is a bullish flag, and prices are breaking out above that today, also taking out or getting back above these resistance levels that we've got at 120.28 to that 50% fib level at 120.52. If we get above the highs we posted on Thursday last week at 121.53, then we can start looking for higher prices towards this 50% fib level on the longer term time frame up at 122.98. Let's look at some of the other dollar markets. So Aussie versus the US dollar, we can see now we're getting close to being a bit more convinced about the break of this downtrend line. If we can take out these highs that we posted on the 15th of November, which we're trying to do at the moment, then I think that would be a pretty bullish sign and indicate that we will see higher prices. The measured move of the head and shoulders bottom comes in pretty close by at 68.73, so I expect to see that tested at some point. If we can establish price above this 67.97 level, then we will look for higher prices on that. If we look at New Zealand dollar, US dollar, that continues to trade within this bullish channel. No real signs of that slowing down. We do have some resistance levels here around 64.22, in which we have a day trade to sell at by the looks of things. So yeah, we'll keep an eye out for that, but all in all looks pretty bullish there. Dollar CAD, sharp reversal on this yesterday. I said I wasn't giving up on their head and shoulders just yet, despite that bullish close that we saw on Tuesday. We reversed all of those gains yesterday, and we are heading lower again today. So still looking for lower prices here. The next stage on the downside is this 38.2 fib level, which provided support back in mid-November. That's at 132.24. We look at dollar Swiss, that continues to consolidate, not really going anywhere, still trading in this kind of range that we can see here on the daily chart, and still showing signs of forming higher lows on the longer term chart. So still need to see a bit more from that. And let's look at dollar yen, because that's had a breakdown today through support at 137.65, targeting a move down to this next level of support at 135.58. Prices have just come up a little bit shy of that, but I expect that to be tested again and for prices to continue moving lower here. If this level gives way, then we're looking for a pullback to these kind of regions, 131.50 to 131.25. So that's it for the dollar majors. I don't know if we've had any requests for any other currency pairs.
No, none at all.
Okay, fine. Let's move on to the indices then. Do you want to talk through
You ever go first, because I'm interested in what you've got to say.
Okay, let's do this. Right. So first of all, we need to look at this, right? This is the NASDAQ market. So it's formed an inverse head and shoulders here. We've then seen prices consolidate to form what looks to be a bit of a flag to me. Then we saw this massive rally yesterday, which was almost 5%. Now that, from a technical perspective, looks super bullish to me. And I think we can start expecting higher prices. The measured move of this inverse head and shoulders comes in up here, which is at 12,969. Also, we've got a 78.6% fib level of this move down here, which comes in at 13,022. So as a minimum, I'm thinking we're going to get up to these kind of levels on the NASDAQ,
Okay.
which from a percentage basis would be a 24% recovery from the lows. Now, we know when we're 20% off the lows, we're actually in bull market territory again. And that's what we saw yesterday on the Dow. It officially triggered a new bull market because it's 20% off of its lows. And it's also taken out this major resistance here from August 16th when we posted a high, closed above that very cleanly with a very impulsive move higher. So we are now from the lows on the Dow, 20.66% above the lows, which technically says that we are in a bull market. The other thing that I'm interested in on the indices front is some of these Asian exchanges. If you look at the China 50, we saw a break here of this downtrend, also taking out this horizontal resistance at 12,678. Yes, I'm sure you'll point out the fact that this candle here looks pretty awful as it stands at the minute, but it is above that previous resistance, which now should act as support. So if we can see evidence of some sort of stabilization or buying re-emerging in this kind of range here, then I'd be really quite encouraged by that. Same on the Hong Kong 50, the Hang Seng. We've seen a break of an inverse head and shoulders pattern, really nice looking one, taking out the horizontal resistance at 18,465. Yes, we're getting a bit of a pullback at the minute, but that's kind of healthy. That's what we want to see as technical analysts, pullbacks to necklines and then look to buy from that point there. So if we do get that, I'd be, again, really encouraged by that. And finally, we can look at the Shanghai Composite. Again, another inverse upward sloping head and shoulders. We've gapped higher today through the neckline of that. Yes, we've got some red and we're trying to fill that gap. But any pullback into this area here, providing that we get some indications of further buying support, again, I think that's very bullish and we're going to start heading higher. And I know it doesn't feel like it should be bullish, but we can't ignore what we're seeing on the charts, right?
No, I agree. I'll tell you what I'll do. I'll do a counter argument for the major markets, the US markets that you
Go on,
just
then.
gave, because I
Let's
do
have
sort
it.
of like, yeah, let's go for it. So Dow, absolutely, completely agree. We've broken up through this long-term trend line, and we've actually taken out the resistance from the 16th of August. You mentioned that, and yesterday's candle is pretty decent from a bullish perspective, really sort of like, you can't argue with that at all. And the only sort of like caveat probably, especially because it's above the 5,500 200-day moving average. So Dow Jones, you know, it's flying away. So I'm not going to argue. That's bullish for me. NASDAQ still got a long way to go before I get excited about this. Okay, it might have rallied 20% from the lows. That sort of doesn't convince me. We've got a 50% Fibonacci retracement we still haven't broken from this swing high from the 16th of August. So you can see how the Dow has accelerated so much more than the Nasdaq, which is like obviously the tech sector. That's a lot of tech stocks in here. We just cleared the 100-day moving average just about, but we still haven't taken out 15th of November's high. So for me, we still got that plenty of resistance above to take out. The 200-day moving average comes in at 12,463. You're talking about like a target in a 1300 move, which will which you can't, that there is definitely a potential for there, but I still think it's got a lot of work to do before I get excited. And I think yesterday's price action definitely exciting for the bulls, but I think it needs to have that extended follow through to get me really excited about this. I mean, if we look at the from the highs to the lows and really sort of take out, we're nowhere near the 38.2% fib. So we that's just a natural reaction level to sort of like in a downtrend. So I still believe we're in a long-term downtrend. And the S&P for me as well, this is like bang on it. It's like hit the downward trending resistance 1, 2, 3, 4th point. I mean, that for me is telling me that I still need some confirmation to be convinced with this rally. It feels like a big rally, 5% is a lot, but really if we think about the overall picture, again, let's take a look at, get rid of that Fibonacci. Let's take a look from the highs down to, is that the lows? I'm not sure where the lows are. Yeah, let me try and adjust it. Oh, no. Somewhere around there. What have we got? We're just through the 38.2% fib. So on this overall sell-off. So yeah, downward trending resistance hasn't been broken. It's above the 55, the 100, the 200-day moving average just. We've just taken out this 38.2, that's at 4,000. So we've pushed above the 4,044, which has been resistance for a few weeks now, but we're just above it. And after 5% rally, we need that additional 5% rally in the next day or so to sort of like to make me feel like this is a turning point. Otherwise, I'm still the angry bear. How's that?
Yeah, good.
Feels like we are at that point of like, is this a pivotal moment? And I agree. We're in, it's December today. Santa rally. Why
Get
not?
your advent calendar out. Yeah.
Yeah.
Yeah, I mean, I've done a fair amount of research into Christmas rallies before, and typically, the Christmas rally is in between kind of Christmas and New Year is the actual Santa rallies that they talk about. Typically, you can actually get quite a lot of volatility in December, so it may be that we do see, a fair amount of movement in the markets before now and Christmas anyway. So that would be good for us traders, that's for sure. One thing we didn't cover was the European indices. Let's just take a quick look at those. So Eurostoxx 50 yesterday, really bullish price action, breaking out above resistance at 3,998. Yeah, a little bit of a pullback today on that, and still haven't really taken out this high here from when was that, back in March. So still a bit of effort required there, I think, to push it higher, but it's had a really big move higher already, and probably needs to consolidate some of these gains before we can see any further upside. Similar situation with the DAX. That has rallied into a number of resistance levels, most notably the 61.8 at 14,576. So still some effort required there before we can get too bullish on the European side of things. If we look at the FTSE 100 yesterday, that broke up through this downtrend resistance that's really contained markets for a very long period of time, going back to April. Every previous attempt at breaking through that level has failed, but we saw that move higher on Tuesday, follow through with more gains yesterday, and now we are up against this next level of resistance, which is this blue line, and we can see that has done a pretty spectacular job at capping upside gains for a considerable period of time, going back to 2020. So we're potentially going back to those pre-pandemic highs at 76.78. So yeah, it looks pretty strong, but as you say, Steve, there are some important resistance levels above. So maybe you've tempered my excitement a little bit on some of these indices, but I still think there are some green shoots, shall we say, or some encouraging signs out there.
Do you know how I know it's the top in DAX?
Because I'm going bullish, is it?
No, because my stop yesterday or overnight was at 14,603 or 4, and that's
Okay.
the high. That's the
Yeah.
high.
14,605
I was
post higher.
stopped out on the high.
Yeah.
So for me, that's like, and it's now 150 points lower.
Nothing worse. Absolutely nothing worse.
So that is like, for me, that's like just, yeah, it's sort of like, and that stop was, I thought it's never going to get there. Basically, we're sort of in this bear mode. It's if it gets there, I am wrong. Let's get out. It's touched it and collapsed. So yeah, I've got to sort of like, yeah, take the medicine.
You missed out on all that, did you?
Yeah. So basically, yeah,
It's still going.
that high, yeah, exactly. As we're speaking now, it's just collapsing. So it feels like.
Is it a 1 o'clock in the morning job? You got stopped out.
Yeah, it was. Yeah, that top of that candle there. What time was that?
1 o'clock.
Yeah, yeah. I wasn't sitting at the screen at 1 o'clock. My stop was in the market, so that's all right. But yeah, pretty disappointing to sort of come in this morning, see you got stopped out. You think, oh yeah, I'm wrong completely, and then you sort of like look at the level it stopped out at. Yeah, exactly. That could be the turning point in the markets. Steve O'Hare stop
/ top.
Yeah.
Okay. Right, let's move on to the gun to the head challenge then. So this is where the two of us pick trade ideas live on the video. Just a bit of fun. We hope that we can make a bit of a return between now and close of business, or 9 o'clock when we close them off. Each of the ideas that we come up with must have stops and targets. They're all placed at market and they're published directly to our TradingView profile. So, we're putting our necks on the line of what we think might work. But obviously no guarantees, as there aren't in any form of trading. So yesterday we had a couple of trades that we published. I was looking at going long on sterling New Zealand dollar. Highlighted a big range here on the 60-minute chart, hoping for a decent bounce. Let's just zoom in there to see. Price action started off pretty nicely. We got up, reasonably well before it then collapsed on the risk appetite returning to the markets, and we saw New Zealand dollar catch a bid. So that was stopped out, convincingly broke through that level of support. So that was a -1R. Steve was looking to sell the FTSE. Got some early indications that we might see a reversal. That was a really nice bearish candle that Steve was looking to take advantage of, given that it already had a pretty strong move to the upside. But sadly, that reversed in the opposite direction and continued to move higher. So 2 trades, 2 stop outs yesterday, probably overdue. We've had a pretty good run on the gun to the head trades recently. You can see here from our equity curve that it's pretty much been a straight line for the last 2 months or so. So no harm in a bit of a pullback there, I don't think.
No, agreed.
Okay, so let's pick some new trades. I think it's going to be a difficult one today, given that we've seen some sharp moves in both directions. I haven't got anything yet, so Steve, maybe if you can have a look and I'll try and dig something out while you're talking.
Yeah, sure. I'm going to go with Bitcoin. I'm going to sell Bitcoin. This has got carried away with the risk rally, and it's got carried away all the way up to the medium-term resistance, and it's reacted lower. A few doji candles and price action moving lower currently. So I'm going to go with this. I think it's going to struggle to get through here. Let's get the levels. So selling at current levels. What's it trading? 17,076. So 76, 8, 5. That gives us a 3.43 to 1. So selling at 17,076. The stop is at 17,335, above the 17,230 high, and the target is 16,188. So that's to get there by 9 o'clock. The potential for it, but I'd rather run it a little bit further, but we can't because it's just the gun to head trade ideas. Yep. So yeah, I'm going to put all those prices in now.
Okay, cool. Thanks, Steve. So Steve, I think, made a pretty compelling bear case, and seems to have sucked me in here with what he was thinking. So I'm looking at Aussie dollar versus the US dollar. So if we are to believe in a market rally and for risk appetite to maintain its move that we saw over the last 24 hours, then we would be expecting this to move higher. But looking at it on the daily chart, yes, there is an inverse head and shoulders, which I'm still believe that it could play out to the measured move target. But looking at the candle on the daily chart so far, we made an attempt at trying to clear this resistance at 67.97 and seem to be rejecting at that level at the moment. So obviously very early in the session and lots can change. There is data due out today as well, which could certainly change the picture quite considerably. But looking at the 60-minute chart, we can see here that we've seen a bit of a reversal, attempting to close below the 10-period exponential moving average, which for me is always a bit of an indicator that I use to try and pick turning points in the market. So I'm going to sell it at the current price of 67.96 with a stop loss above the highs that we've posted this morning at 68.42, looking for a decent-ish pullback in price. In order to make the risk-reward ratio decent, I need to go down to these levels here, which is at 66.81. So I'm looking for a 2.57 risk reward ratio on that, looking for a minor pullback in Aussie dollar. So I'll get that published up as well. And if anybody wants to check them out throughout the day, you can do via our profile at signal_center.
Nice one.
Okay, so day ahead. We've got a few bits out today that we need to be aware of. Firstly, we've got the US PCE prices index. That's at 1:30 UK time. At the same time, we've got the US jobless claims. Obviously, that'll be well watched ahead of tomorrow's non-farm payroll number. And then at 3 o'clock, we've got the US ISM manufacturing index. We also, I think, have some speeches today from Andrew Bailey, the governor of the Bank of England. But then tomorrow we've got the US non-farm payrolls and the Canadian employment report as well. So likely to be a volatile couple of days as a result of all that's going on. And be interesting to see what kind of reaction we get following the strong move higher in equities and risk assets yesterday.
Absolutely.
Cool. So I think that's it from us. We will wrap it up there. Thanks for watching. Obviously, feel free to get involved in the stream and post up your comments, guys. We'd love to know what you're trading or what markets you're looking at. But that's it from us today. We'll be back on Non-Farm Friday tomorrow.
Cheers all.
Have a good day. Goodbye.